There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Ovoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome. Good afternoon, everyone. Steve Vetterl here on the mic. Today is the 1st of November. Keep in mind, we have a week away till election time. Please make sure you are registered to vote. Every vote does count. I sound like I'm stumping for myself here, right? On the pulpit. In any case, this is the Tuesday, sometimes Wednesday weekly call. I try to do these somewhere in the area of 1 to 2 o'clock, which is about a minute away. So a bit delayed here, but we still make it happen. One thing I would suggest you guys do is the call that I've done the last, I'd say 3 Saturdays. Has been very in-depth. Each has addressed a different subject. As usual, I have a tangential nature to a lot of these presentations, but really the key is to just get a couple of good nuggets out of it. We'll speed this one up just for the purposes of showing this, but let me just make the screen a little bit bigger. We are on Forex Factory. I always like to take a look at what the news is. And let's do it in large format. There we go. I always try to filter these out. We only really care about the red folder events, quite frankly. Right, so have a lot of stuff going on we're looking at here. It's Tuesday, November 1st. ISM, a lot of these things came back and pushed the S&P down about 1/3 of a point. But, as you may not have heard over the last few weeks, we have pretty bad inflation unless you've crawled under a rock or magically reappeared for an alien abduction. I would say welcome back to Earth. We have high inflation, and it is pervasive. So what do you do to curtail inflation? Typically, central banks will raise interest rates to have, essentially the stave off that inflation. So that's kind of where we are. Doesn't always work. I actually wrote a blog on this. You guys can see. I think here, let me just show this real quick. This is our website. Shameless self-promotion and plug. But I wrote a blog here, and it's called A Walk Down a Dangerous Fed-Induced Memory Lane, right? So it's a bit involved, a little bit of the scaries here, but I take a look at what the Fed did right and what did wrong. This is not conjecture on my part. Much of this is rooted in fact of what actually happened, and essentially going down, but talks a lot about that. I would always encourage you guys to take a closer look at that. It's just firstdownfinancialinc.com. You can read the blog. It is a different one. I guess in the spirit of Halloween yesterday here in the US, it was a scary one. So I always try not to trade around these events, although I don't get as much time to trade these days. So we have essentially the non-farm payroll this week. That's on Friday. Typically, this is a huge event. I think it carries less weight. No surprise, right? What carries the most weight? Anything in this entire list that says CPI, month over month, or year over year, for any developed market, right? Carries just as much weight in the European Union of all those countries as it does in the US, in my opinion, because much of the central banks are moving in lockstep with each other as far as raising interest rates, right? So on the docket tomorrow, we will all be watching this, right? Markets have been pushing up, especially equity markets, which means the dollar has been going down, and almost every other currency in relation to that in the majors arena has been going up. A lot of that is because, quite simply, it is a melt up, or for lack of better news, a meltdown in dollar, which has been on the lift for almost 2 years, and every other currency is going down, right? So you're due to take a break from that, even though it may resume that particular freight train event on for. It's still something that could definitely affect you down the road. So this is pretty much it for what I want to say. You can always click on these boxes if you want to get a little more in depth. Obviously, the key thing to any of these inflationary numbers, and the goal of most developed market central banks, is to keep inflation rates under a historical norm, which is somewhere in the 2.5 to 3.5% arena. So let's go to the charts real quick. Didn't address this too much on the weekend. I talked a lot about equities. I'm not going to get into that today. I'm going to focus on the dollar. If you guys are looking for levels for some of your equity indexes you may trade at MT4, MT5, check out my Saturday broadcast. So let's just talk about the dollar. As I had mentioned this weekend briefly, 115 is essentially capping this to the high. And right now, right around 110 is capping it to the low. We're spinning in a sideways trade and building it out until we get better direction or some sort of additional direction from the Federal Reserve. Euro US dollar, these are all daily charts. Each candle represents a single day. So let's take a look at that. Obviously the opposite of the dollar. So low, it's somewhere in the area of 0.09550-ish was the low. And the high, it's basically a buck. So we are in that range right now, and we're trading sideways. And honestly, I would think this dollar high here probably holds. All bets are off, right? If for some ungodly reason somebody gets to some of these central banks, and here's that conspiracy theory again, right? But just continues to have them maybe push the pivot theory versus continuing to raise. I just see a short barbecue, a dead cat bounce, if you will, in all these other currencies. And the same thing with the equity markets, in most cases of the developed markets globally, because they've been going down all year, right? They got to take a break and rally. It's just part of how markets work in terms of efficiency. So that is the Euro's range I see for now. GBP, outside of the craziness that took place a few weeks ago, we're back essentially in a pretty tight range. I do think this 1.1610-ish 30 area, whole range right in here, I think you can even argue this go all the way to 50. I'm pretty sure this is going to hold. Yeah, we're range bound for now. The beauty of being range bound, if I am correct and not wrong, is that oftentimes you'll auction from one side to the other, right? You see this time and time again, as far as if one has properly identified a support and resistance level on the charts, and we've identified, or in some cases it's, some sort of big move takes place either out or away from value, right? Establishing a new range or territory, that volume will be, within range. And you can use that as tradable highs and lows. US CAD, same rangeness. JPY, just for purposes of reference. Keep in mind, these are all daily charts. Aussie US, same thing. It's rallied. It's been in a decline. On a weekly chart, some of these are setting up to be slingshots. Euro CAD, GBP. This is the NEO currency. I always spend a little more time on this. Take a look at the weekly. I think I did this on Saturday. I forget. I'm showing this because when you have events like, I don't know, multi-years we've spent inside of a range and then it breaks down below that, either high or lower than that range, especially on something as broad or high level as a weekly or monthly chart, carries significantly more importance as a level, right? Not to say this is going to rip all the way back up to that level. That would require a tremendous rally by the British pound, which I just don't see happening in a country that has higher inflation than the US, right? So, but doesn't mean it can't happen. So we have a newly formed level right here at 1.5853. It carries some strength. Let's jump back to a daily. 5853. Puts us somewhere in this range. Hard to really note that to be some sort of solid high, at least on a daily. It's showing it on a weekly. It carries more weight. Not always. Just keep in mind moving averages, all kinds of fibs, every different way you want to dice up something in terms of technical analysis. Those indicators carry usually a higher degree of strength on the higher the time frame that you go. GBP/NZD, let's drop back to yes daily. Such a wild currency to trade. As goes the Australian dollar's relationship into the US, as goes everything else that pin actions off that. I've talked a lot about how that works. Plays out in currencies. Here is gold. 1630 low. Many are calling for this to be considerably higher than where it is, and it isn't, right? Talked a lot about this. You may or may not ever trade gold, and quite frankly, if you don't, I think you're probably the wiser. But honestly, it has its day in the sun as far as correlations when the whole world's going to crap. Typically gold and the dollar are going up, and that's it, right? Sometimes bonds, which hasn't been the case now because they've been raising interest rates, obviously, right? So credit markets have been suffering declines based on that. So I always want to know where gold and oil are, even though I don't trade them. Here's oil. I haven't shown this chart in a while. Take a look at weeklies. Set the price scale here. Let's take a look at a long term. Here's when oil went to nothing. Hey, could I have gotten filled on this trade? Probably not. It was freak showing us stuff. $88. Seemed to me at some point, market starts to cool in terms of the economy cooling. Haven't seen any signs yet. Starting to see some cracks in the fissure, right? But a lot of cases, those cracks are just prices that went up inordinately high, coming back down, right? Not necessarily below where they were 2 years ago, including oil. So just keep that in mind as you're looking at big purchases or large expenditures, things like that. Let's take a look at crypto, and I'm going to be done. This is on a weekly chart. Really helps get rid of the noise. What it also does is show you how quiet this market has been. I think it's a factor of many starry-eyed individuals got blown out, so there's less interest, right? But yet, typically when that happens, price would decline more, and it hasn't. So, you spend enough time balancing here, you're either going to get so many holders down here with stops. I've had multiple discussions on this, and this can apply to almost anything you trade. And just envision the more time it gets spent, the more you have stops here, and the more you have stops here. And ideally, what an efficient market does, not necessarily in crypto, but if this absolutely plays out in the S&P, if the boat gets loaded heavy enough here or here, they're going to have what's called a Q clearing event. Means it rips all the way up, blows everybody's stops, and then it reverses and hits the other group, right? Once that is cooled out, if it's still a solid pattern, that's when I would enter the market. Now, the problem is that is a very general statement that one could certainly say, well, Steve, geez, how the hell do I know when that's going to be the case? You don't, unless you know what you're looking for. But ideally, once everything gets cleared and all the weak hands, if you will, get thrown out of the market on both the up and down, then it starts building decent patterns to break out or break up. Those are the ones you want to be on. With that, I bet everybody adieu. I have to plan a trip to Washington, D.C., believe it or not, for the day after Election Day. We'll be in D.C. Hopefully we won't have to be avoiding any riots. So I wish everybody a great trading week. My name is Steve Federal. Off the mic. May the trades be with you.